Now, one of the fundamental questions that we ask ourselves on the Indian Dream podcast, the reason we started the podcast was that how can we build a business like this, right? And this can be any business that we see out in the world. And we started the podcast by answering that question by talking to different founders and asking them that question. How did you build this company? But in my opinion, you can also get a really good overview of how people build a company by reading the financials of the company. And we do this quite often for our different Munchies episodes, even for our founder episodes. Right. So what I did is I spent about 8 to 10 hours reading through this 460 pages of the Sula financial filings. And I'm going to use that information to piece together how exactly, right, Sula built the company, and how if somebody else wants to do it, they can build a second Sula Wines in India. So I'm basically going to break up this discussion into four pieces. First of all, people. Who did they hire and how did they compensate them? Because people is the most important part of a business's journey. Second is capital. How much money did Sula use and how much money would I need if I want to rebuild Sula? Right. Third is working capital. How much money do they need to run their day-to-day business? And the fourth part is the brand and product strategy. What story of strategy in terms of product and marketing am I seeing through the financials? Right. And these financials that I've taken are only what they made public. And it's only for the last 3 years, which is FY20, FY21, and FY22. Obviously, COVID was in the middle of that as well. Right. So when I'm done going through the story of people, capital, working capital, and brand strategy, what I think I'm going to convince you guys of is four different things, right? First of all, there's a lesson in here on how compensating your top employees generously and using employee stock options, you can retain top talent and you can make them build amazing companies. And this is what I will call process power, because by keeping the same key employees in place, they will build amazing processes that will take your company to the next level. Secondly, Sula has built a strong moat around themselves by investing so much in capital. You will need thousands of crores to spend if you want to build the kind of company that Sula has built. And as a result, they've also built a lot of scale economies. It's a very basic economic term, basically meaning that if you have a lot of production, it'll be cheaper to build that next bottle of wine than it was to build maybe the first 100 if you have a very small manufacturing unit. Thirdly, what I realized by going through these financials that even businesses with lots of inventory and long payment cycles can generate a lot of cash by having high margins. And that is what I saw in Sula. And fourthly, Sula has a very clear product and marketing strategy that will help them set apart from Growers, Fratelli, and everybody else that is there. Now, before I go into the story, I kind of want to emphasize to everybody listening that I'm going to just take bits and pieces from from the financials, but I really think that if you're interested in the alcohol or beverage market, I highly recommend that you read through or at least skim through this 460-page document, because you will get so much information in here about the regulations, the taxations, the government grants that Siddharth and I spoke about earlier, the different distribution models that are used in different states. Sula speaks, I think, for a solid 150 pages about the trends that are changing the industry in India. And there's so much more information, so much valuable information if you want to start your own business in the alcohol or beverage space.
I think that's a very valid point. I think anybody who's already in the alcohol business should definitely read the entire prospectus, right, in and out, because it is a manual of sorts of what it takes to build a large profitable company in this space. Even if you want to get into this business, it's important that you read it. And after reading it, if you still want to go ahead, after reading the regulations, after reading the inventory cycles, after reading all the difficult parts of the business, if you still want to go ahead, at least you'll be better prepared on what you're entering into. And if just reading it makes you feel like this is not for me, well, you saved a lot of money and time. All the aspiring entrepreneurs in the alcohol beverage space, all the existing entrepreneurs should definitely read this. It's an amazingly written prospectus and gives you a great overview of the alcohol market in India.
Yeah, and they actually speak quite a bit about beer as well. So even if you're in the beer industry, take a gander at this. Okay, first of all, let's jump right into it. Let's look at the people side of it, right? The organizational structure and the compensation for these key employees. And the reason I want to start with it is because if you speak to any new entrepreneur in India, the main thing that they say is like, oh my God, it is so difficult to hire in this country. Well, okay, so let's look at how Sula is organized. At the top, there's the CEO, Rajiv Samant, who actually 2 years ago, he resigned as the chairman of the board. Now somebody else, an independent director, is the chairman of the board. But anyway, so Rajiv Samant is at the top, and he has only two people reporting to him. First of all, there's Chaitanya Rathi, who is the chief operating officer. And secondly is Karan Vasani. He's the chief winemaker. All the other vice presidents and CFO, they all report to the chief operating officer. Why is this important? Well, first of all, the COO is handling the day-to-day work while Rajiv Samant can focus on what is important, the product and the long-term strategy, right? I think this is so important for Sula because a mistake in production this year will only lead to, you'll only notice that mistake in 1 or 2 years when the wine is not tasting well. So you have these different key employees at the top. Now, one question is, how is Sula compensating them? Sula is a very, very generous paymaster, and they're compensating them both in really good salaries and secondly in ESOPs, which is employee stock options. So Chaitanya Rathi, who holds probably the most amount of responsibilities in this company, he's paid 2 crores per year. And plus he gets an extra 7 lakhs in variable pay, but compared to 2 years, 2 crores, that's not much. But he also owns 0.64% of the company. So that's a significant amount of stock options that he has. Secondly, Karan Vasani, who's also very key for a wine company. He gets a salary of 59 lakhs plus he owns 0.26% of the company. Then there are different people, multiple people have salaries of 1 crore, of 90 lakhs and stuff like that, right? So what I'm trying to illustrate with this is that Sula knows that if you want to have good people, you need to pay good salaries, plus you need to pay them ESOP in order for them to be interested in growing the business. And overall, if you look at it as a whole for Sula, 14% of their revenues goes towards salaries and wages, which just, I think, illustrates to you how important they take people in their overall strategy. When I usually look at manufacturing companies, I see salaries and wages around 9-10%, right? So these guys are paying about 5% extra than what I see for the average manufacturing company. And just to give you kind of a comparison as to how these salaries compare to other companies. So the CEO of my biggest rival company, the CEO, the chief executive officer of a 1,200 crore company, he was paid 2.2 crores, which is the same as what the chief operating officer of Sula, which is a 450 crores company, was making. And I knew the COO of a very large listed company as well. These guys have thousands of crores of revenue. And he was also getting a salary of 1 crore. So what Sula is paying is very comparable to some of the biggest companies in India. So they have been quite generous. And as a result, these guys have been around for a while. And as a result, what I was saying earlier about process power, right? It's only when you have your employees around for a long time, you get that process power. You're able to build a business that is self-generating.
So that's typically compounding happening in terms of the people and their knowledge and their skill sets growing over a period of time, and they get more confident about how Sula operates and what they can do and they can't do and what works and what doesn't work, which is in a way what Sula has done really well. Just to add, 2 crores is obviously a large number, as you said, but 0.64% of Sula is not a small percentage ownership, right? Like that's a decent percentage ownership. I'm assuming obviously Karan Vasani didn't have to take the risk that Rajiv Samant took to actually build the company. So that 0.64% is also pretty generous, to be honest.
Yeah, actually, that's a very good point because the CEO of that 1,200 crore company I was talking about had 0% stake in the company. So clearly, these guys are getting compensated even better than a CEO of a much larger organization. Okay. Now we've spoken about the people. So the people strategy, they take very seriously. Clearly, they're paying their people generously. Now let's look at the capital part of it, right? What capital is the money that they've invested in order to build all of the assets that are generating revenue for Sula. So this is the reason I'm looking into this is because I want to answer the question: how much money did Sula have to spend in order to build that entire organization that it is today? Right. And this is where I start becoming that real business nerd that we were talking about earlier. So to find this information, I looked at their balance sheet and I specifically looked under something that's called property, plant, and equipment. Now, this is where it starts getting really interesting for me as a business nerd. Right. So to find this information, I looked into their balance sheet and I specifically looked under a heading called property, plant, and equipment, which is also called PPE. The amount of money that they've spent over the last 26 years, remember Sula started in 1996, is 427 crores, and they continue to invest significantly every year into PPE. In the financial year 2022, they invested an additional 55 crores into property, plant, and equipment. But a very major thing to remember is that Sula is 26 years old. And the number I mentioned right now, 427 crores, is how much they've paid over the past 27 years, 26 years, and not the present value. So, for example, they could have bought a piece of land 26 years ago for 1 crore, and now that piece of land might be worth 30 crores. But on their books, it's still showing as a payment of 1 crore. So, if I had to remake Sula all over again, I'm going to have to pay a lot more money to buy these capital goods than just the 427 crores that's showing on the books, right? So I can break up this capital into three major components, which is first of all property, 95 crores for 2,600 acres of land. They own 2,600 acres of land. It's just so much land. And this 2,600 acres of land will cost a lot more than 95 crores now. Building, they've invested 150 crores into building the buildings, and they've invested 136 crores into machinery and equipment. And this machinery and equipment is generating 14 million liters of production capacity per year. 14 million. In comparison, Fratelli makes 1.4 million liters of wine and Grover makes only 4.7 million liters of wine. So Sula is much larger than these two companies.
Just the land holding itself is such a big moat, right? Because if somebody wants to come in and actually compete, acquiring that much land at today's prices is just going to make the business entirely, not viable.
Unviable.
Unviable.
Yeah, exactly.
It's completely unviable. And one of the things that we also discussed, I think, both Fratelli, I don't know about Growers, but Fratelli and Sula both had the land holdings within the partnership, right? So Fratelli partnered with another family who had the land holdings around Nashik. And I think Sula, the Samant family already had some land holding, at least to start with. I'm sure they kept acquiring, as they set up the business. And I think that is key. If you don't have that land holding, if you plan to lease it out, if you plan to buy it today, I don't think the business is viable. And that's a huge moat in itself.
Yeah. And that's exactly the point I was going to make, is that because they've invested so much money over the last 26 years, they've built this moat and they've built scale economies. And as a result, it's so difficult for other people to catch up to them, right? And as a result, I think Sula is going to retain their crown as the largest winemaker in India for quite a bit of time. But you know what? One question I had in mind when I was reading through all of this, right? So they've bought 2,600 acres of land. They've built all of this production capacity. But how did they do it? Did they use equity? Did they use debt? And they've actually done both. They've used a combination of equity, which is how much people invested into the money, how much profits they've accrued over the years, and they've also borrowed a significant amount. In fact, over the last 2 years, there's been a big focus on paying down their loans. They've reduced their loans over the last 2 years from 78 crores to just 48 crores. I think one of the reasons they've done this is because they were preparing for this IPO. In fact, I want to make one very important point over here, that loans can be quite risky. And if you look at their balance sheet just 2 years ago, Sula was not making enough profits to cover their entire repayment. In FY 2020, they actually made a loss. And part of that loss was also because of this. But in FY 2022, I guess in preparation for this IPO, they made 2x the amount of profits they needed to cover their debt repayments. So they're quite safe now. In fact, one of our first ever episodes is this episode, I think it's technically episode number 2, is with Akhilesh Bhargav, a good friend of mine. He talks all about how he used a ton of loans to build a 250 crore company from scratch. You guys really should go back and listen to that episode. It talks a lot about the riskiness, but also the advantages of using debt in order to build your business, right? Anything you want to add here?
Yeah, when Sahil says debt, he's not talking about buy now, pay later kind of debt. This is corporate debt, which, if used well, is actually very beneficial to the company. And obviously, if you over leverage and if you take riskier bets with the debt, there it could also be the reason why companies unwind. We've seen that over the last decade in India with so many bad loans that happened. But a lot of these cases were either cases of greed with over leveraged fraud, transferring the money out of the business, all of those. But if you're honest, the intentions are right. If you're not too risky with the money, debt is a great way to grow a business because you don't have to part with equity.
And that is actually what you can exactly see in Sula, that 2 years ago they were kind of on the precipice. They could have gone, because if you have too much debt and you're not able to repay those loans, then it becomes a downward spiral. You can't get out of it. But luckily Sula was able to get out of it, and they recovered fantastically.
Despite of
But
COVID, which shows the probably the strength of the business, right? If not for
yeah.
COVID, maybe the situation wouldn't have gotten that bad anyway. But the fact that they were able to recover despite of COVID is a testament to how strong the business is probably built.
Can I give an example? Actually, I know one company specifically that it specifically recovered because of COVID, because they were not making sales. But in that meantime, they were able to recover from the people who owed them money, and therefore the business survived. But otherwise, they were on the verge of bankruptcy. Okay, going back to Sula. So yeah, COVID was not just always bad, but anyway, whatever. Going back to Sula. Now the third part of what I'm going to talk about is the working capital. Right now, this is diving deep into the mechanics of how a business actually work. um, the entire working capital for Sula should be messed up, in my opinion, because of their inventory. Because as a wine company, what makes sense to me is that they're keeping wine in their barrels for 2, 3, 4 years, right? So I would expect to see their entire inventory numbers to be completely messed up, for their working capital cycle to be completely messed up. So what I did is I checked their cash conversion cycle. So what cash conversion cycle means is that if I invest money into making the wine right now, how many days will it take for my clients to pay me that money finally, right? And this cycle is comprised of three main factors. Firstly, inventory, right? And this is the finished product. It could be the semi-finished product, which is aging in a bottle in the barrel somewhere, or it could be the raw material, which is grapes to make the wine. The second is the trade payables, so how much Sula owes to their suppliers. And the third is trade receivables, which is basically how much Sula's customers owe to them. Typically, you want your inventory and receivables to be as low as possible, and you want your payables to be as high as possible, so that you don't use as much of your own money in the process. So for Sula, the cash conversion cycle I thought would be something like 2 years, but it is actually 347 days, which is very high compared to an average business. But it's not that bad. What this 347 days basically means is that if Sula starts making wine today, it takes almost one entire year for Sula to get that money from customers. So if I invest, let's say, 100 rupees in making the wine today, Sula will get 300 rupees 1 year from now from their customers. So now what this means is, for Sula to make 450 crores in revenue every year, they need to invest 135 crores each year. Now this 135 crores is the raw material and the packaging and all of that stuff. They need to invest this 135 crores into working capital. You can see this clearly in their balance sheet, because their working capital borrowing was 128 crores in FY22. The reason they need to invest only about 130 crores to make 450 crores in sales is because they have such high gross margins. Their gross margins are around 70%. And as a result, they can convert only 135 crores of raw material into 450 crores of sale. And how does this also compare to their competitors? Sula is much more efficient in their cash conversion cycle. I'll just give one example of their inventory days. Sula's inventory days in FY 2021 was 465. For Fratelli, it was 595. And for Grover, it was 878. Right? So Grover is keeping their wine in inventory for almost twice the amount as Sula. But that's also because Grover has a slightly different product strategy, where they're going for more high-end wines, so they need to keep it in inventory for longer. Um, but yeah,
Yeah, just to add, they need to keep it in inventory longer because the more expensive the wine, the longer you have to age it. So it's going to be in that barrel for 2 3 years. Therefore, the inventory is much higher. And if growers just product strategy wise is targeted towards that 1,000 to 1,200 rupees a bottle versus Sula does across the board. We're going to talk about that in the product strategy.
Yeah, I just want to mention one thing over here. How efficient they actually are with their inventory. Out of 160 crores of inventory that they have, 120 crores is into uh, work in progress, which is basically the wine that is being aged, and only 20 crores is in finished product. So they're actually quite efficient. They're only keeping 20 crores of a finished product on stock. So I think that's pretty efficient for a 450 crore company.
Yeah, I do want to add here that the fact that the finished goods is actually 20 crores tells you that the risk of returns is not that high for Sula. So I think one of the things that's in the prospectus is they are dependent on 4 or 5 distributors across the country. And these could be private distributors or the government bodies. So there is a lot of power that these distributors have, because even one or two sort of unionizing, becoming a group and saying that, hey, we don't want to work with you, is going to have a significant impact. So there's a lot of power that the suppliers have. And therefore, one of the policies that's there in the market, from what I understand after talking to people, is if certain kinds of bottles don't sell through their distributors, retailer channels, they come back to Sula, right? So that's actually a huge loss to Sula if you're not able to dispose those off at a decent price. The fact that that's only 20 crores makes you think that, okay, they know what sells and they are making what sells. And, as you said, everything being in the work in progress is actually good, because that's going to go out to the market. That hasn't gone out to the market yet.
Yeah, so just to illustrate what you were saying about power in just 5 customers of Sula control about 40% of their total revenue. And for any company where sales is so concentrated only to a few customers, that presents a big risk, because
Yeah.
what if they decide to change, right?
Yeah,
Okay,
if anybody wants to read about Porter's 5 forces is a very good framework to read about who holds the power, suppliers. It's a very interesting framework. You should go check it out.
yeah, I don't think suppliers have much power in this case. But anyway, moving on. I want to take a stock on what we have spoken about already before moving on to the last part, which is the strategy part of it, right? So where we are right now is, first of all, we have seen that Sula pays their top employees very generously, and they're also quite generous with their employee stock options, right? Secondly, what we've seen is they've invested heavily into buying land and building and the production facilities for the last 26 years. So it would be pretty difficult for somebody to enter this market, for a new entrant to really take over what Sula has already done. And thirdly, they're using around 130 crores of working capital to finance their business. What this is showing me is that any competitor who comes up, any new competitor, will have to spend thousands of crores in order to build what Sula has built. Okay, now let's
I want to add something here, right? Unless that competitor is significantly venture capital funded that can come with the 500,000 crore war chest, chances are they're going to be building up slowly. And one of the things that Sula has done is they are always in the market for inorganic growth. By that, what it means is they can go out and acquire the smaller brands if they feel somebody is bringing something different to the table, or it's an interesting brand and we can potentially go out and acquire it. And we can see that they've acquired this brand called York Wines for about 17 crores, if I'm not wrong. So a very small setup, but they acquired it because they thought the brand held some value and they were making interesting products. So Sula will always have that opportunity when these brands are growing. They might go out and acquire them before they can even become huge competitors.
Now I want to move to what strategy I can see Sula using by going through their financials, right? So I'm going to focus on 4 different parts of their strategy. And I'm going to use evidence from their financials to say that this is exactly what they do. Right? The first part of the strategy that I am seeing is a focus away from imports and distribution business, and a very clear focus on building their own brands. The second is a focus on retail and restaurant distribution. Third is an investment in alternative marketing, sorry. And fourth is a growth of the wine tourism business. Now, this fourth part of the strategy is what I was the most surprised by, but we will get to it. I was shocked by how much money they're making from my wine tourism. Anyway, going to the first part of it, right, which is the import reduction or the complete reduction of their distribution business. So for a lot of businesses, the easiest way to get into the market is by taking somebody else's brand, saying that I will build distribution in India, and then selling their brand everywhere. The problem with that is that you don't have the power of the brand, and at any point of time they can cut you out. We saw this with one of our very early interviewees for the water bottle distribution business that they built. So before they built Rabitat, they had built a distribution business for another I think it was a Swedish company. And then that Swedish company left them and they had to build Rabitat from scratch. Let's start with their product strategy and their decision to move away from their distribution business, right? So one of the first things I was confused by when I looked at Sula's financials was the 16 crore loss that they made in FY 2020. Remember that this was a financial year even before COVID happened. But 2 years later in FY 2022, and FY 2022 was the year where the Delta wave happened. But in FY 22, they made a huge profit of 51 crores. And I was scratching my head. I was asking myself, like, what the hell happened? And I did some digging. And my assessment was that the biggest change in their business was a huge reduction in their import and their distribution business. In FY20, imports was 32% of their business model, while in FY22, it was only 8.5% of their business. There was also a huge shift in the gross margins of their import business. The gross margin of the import business was only 25-30% in FY20, while now it was 50%. So they moved to the more luxury items. And if you also, by the way, look at their own brands, the sale of their own brands, they have gross profit margins of 65 to 75%. And they've mentioned this in the prospectus as well. They clearly said that their main strategy is to continue focusing on our own brands over third-party brands that we import and distribute. So, Siddharth, a question for you, because you know the Sula brands better than I do. What are these brands? And like, do you kind of have an idea of what they're doing with these brands?
Yeah. Before I talk about that, interestingly, they reduced revenues from their peak year of 2020. So they were doing 530 crores, somewhere around that number. And they reduced it by 70 crores. So the last year, when they made 52 crores in profit, they reduced the revenues by 70 crores. That goes back to your point of like, not focusing on the import business at all. And this is something that we've heard across different episodes from different entrepreneurs, that focus becomes extremely important. Focus of your resources, focus of your time becomes extremely important. And this strategy of like, forgetting the distribution business, forgetting the import business, that could have given them the top line, but wasn't impacting, was probably hurting the bottom line. Getting rid of that has paid off beautifully for them.
And actually, what I want to add there is focusing on high margin products. Right? A lot of times it's very easy to focus on the low margin products because it's selling in volume. But focusing on high margin products, focusing on that marketing sales effort is what is getting them those mega profits now.
Yeah.
And I saw this in...
Sorry.
I saw this in one listed company that I was analyzing a few years ago. Their revenues went down by 70%, but their profits went up 3x. And I knew somebody was working in the company, and he said that that's because they shifted to a complete focus on their high margin products and completely forgot about their low margin products.
They were clearly not funded by venture capital who was looking for top line growth. Yeah. Okay. So in terms of the product strategy, I think one of the interesting things about Sula, and which goes back to their installed capacity being significantly larger than anybody else in the market. You can combine the rest of the players and that will still not meet the installed capacity, the capacity that, they can produce wines. What they are doing is, instead of focusing on just building the Sula brand or, just having one brand, they have a house of brands. So they have brands like Sula, Dindori, Rasa, The Source, York now, which is one of the things that they acquired. That's in the elite segment. In the premium segment, they have the same brands, but Satori is one more brand, and they have different products within this. So they have, the way wines work is there are different labels within this. So there's a sparkling Shiraz could be an elite, elite brand. A Shiraz Cabernet could be in the premium segment. So wine enthusiasts will know how this works. But different brands and different labels is how you need to think about it. And they work across segments. So elite is 950 rupees plus. That's the premium segment. Or that's the elite segment. There's a premium segment which is between 700 to 950 rupees. Sula has 3 brands within that. In the economy segment, which is 400 to 700 rupees, Sula has 6 brands: Madeira, Mosaic, Port Gold, Cardu, Dia, York. And then in the popular brands, which is less than 400, there are 4 brands: York, Heritage, Port Gold, and Samara. What this tells you is they're following this house of brand strategy, where they're not diluting the Sula brand by creating low value products. So they're keeping Sula as the premium in the elite premium segment, and they're creating different brands. Now, what changes? A few things changes. Obviously, the quality of the grapes, the number of years you're putting it in the cask, and and keeping it to age. All of those things change for the cheaper wines. And so basically easier to produce, low cost to produce, and hence cheaper. And the higher end is better quality of grapes, better quality of harvest, more processing, and keeping it in the cask for much longer. So this entire strategy, they've basically been able to capture the entire market across different segments. So which I thought was very interesting. Fratelli, Grover do this to a certain extent. They don't go too far down in the mass market. They probably operate in the premium and the elite segment. Fratelli also came up with a bottle called Junoon, which I don't think the wine market categorizes, because that bottle was 4,000 rupees a bottle. But that was an experiment that was, trying to prove a point that Indian wines can be really good and can be expensive. But I thought the entire house of brand strategy is very interesting.
Actually, the Sula Dindori is one of my favorite wines. I really enjoy that. But one interesting point I want to make is just the Sula Shiraz Cabernet in FY22, it did 90 crores of revenue. And remember, the entire company did 450 crores of revenue. So this one brand did almost 20% of the entire company.
My hunch says it's not like Indians are looking for Shiraz Cabernet. I think they have just the right price point with just the right packaging, and probably the most distributed of all the products that's resulted in this.
Yeah. I was surprised by that. I honestly thought it would be Dindori is their biggest wine, but I was surprised that it was the Sula Shiraz.
Spoke like a typical elite Bombay boy, thinking the most.
Why is Dindori expensive?
It operates in the premium segment. Yeah, it actually operates in the elite segment, which attaches to your aura perfectly. You brought yourself onto that.
Yeah, I didn't even know that. I did not even know that. I did not look at the product section of the prospectus.
I think if you ever see a bottle of wine that's less than 400 rupees, you're just gonna think this is not wine. This is something else altogether. Let's not buy it.
Okay, let's move on from this bashing of me. But so you know what? So they have this entire strategy of their products, right? And the question is, how are they doing this, right? How are they strengthening their brands, and how are they forgetting the entire trading business? There are 3 main ways that I have seen that they're doing this. First of all is a investment in distribution, second investment in alternative marketing, and the third is the growth of their wine tourism business. So first, let's just look at their distribution. Right? One of the main things that they mentioned in their prospectus is that customers first come across their wine in the restaurant, and then they go to a retail store to buy it, right? And as a result, they've spent a lot of time and effort into building this distribution market. Sula is in 13,000 retail stores, and in 8,000 what they call HoReCa, which is hotels, restaurants, and catering outlets. In comparison, Fratelli is only in 9,000 retail outlets and 5,000 HoReCa, and Grover is in only 3,000 retail outlets, right? And this actually it perfectly matches my experience as well. When I go to a retail outlet, which is a wine shop, I usually see Sula everywhere. I see Fratelli in most places, and I honestly don't come across Grover very often. So being able to get your wine easily and seeing it everywhere definitely helps a lot with your final marketing push. This is one of the things, by the way, I think Bira had done very well early on. But anyway, getting back to Sula, you might have an opinion of Bira. Let's not go in there. Let's get back to Sula. Let's talk about the investments in alternative marketing. What Siddharth was speaking about earlier, about when we spoke to the founder of Fratelli, Mr. Sekri, he said that advertising in this market is super difficult. You're just not allowed to advertise in this market, right? Because it's alcohol. Now, if you look at the financials, you do see an investment in marketing of about 5 crores for Sula. And that is actually very low for a consumer facing brand, because generally consumer facing brands, you will see an investment in marketing of around 5%. So for a 450, 500 crore brand, you should see an investment in marketing of around 25 crores, which you don't see over here. 5 crores is barely 1%. And this 1% is mostly going to be events, dinners, and stuff like what Siddharth spoke about earlier. The reason it's not 5% is because you can't spend that money on advertisements. But if you go further down into the financials, you will find an entire separate line item for one of the major investments that Sula does into their marketing, which is Sula Fest.
Before we go to Sula Fest, I am so glad Sula hasn't come up with a bottle of water or CDs or soda or something which is just this is commonplace in the Indian alcohol market with Bagpiper and McDowell's and doing, these people doing these ads. I'm just so glad that Sula hasn't done that.
That's a very good point. And I think that's also what separates Sula from everybody else, right? Because everybody else is doing that. They need to separate themselves from Royal Challenge or Royal Stag and all that stuff, right? But Sula Fest, the last time they did Sula Fest was in Feb 2020. This was literally a month before the pandemic. They got very lucky. But also I got very lucky because they did this in Feb 2020, I was able to see the expense in the balance sheet, in the P&L statement. And they spent 3.5 crores on that one single event. Now, usually, if I see 3.5 crores for a single event, I will get a bit scared. But for them, for people outside Maharashtra, they probably don't realize how big an event Sula Fest is in the social calendar over here. In 2020, it was the largest wine festival in India, and it had more than 10,000 people who attended. So it's a pretty large festival, and people from Bombay take it very seriously.
And they get paid for marketing, technically, right? Like you're getting paid for marketing your own brand, and that's where this whole wine tourism, agri-tourism comes into play, which is you obviously have to invest upfront to build that brand value for a fest. You have to do a lot of event management, which could be very difficult for a wine company, right? It's a completely different business altogether, and I'm sure they treat it as a separate business unit. But at the end of the day, people who end up going there taste so much of their wines, experience Sula, experience the vineyards. And when they come back, the recall is going to be so much higher than a Fratelli or a Grover.
And this was exactly the point I was going to make, that stuff like this, alternative marketing and a huge event like Sula Fest is what is separating them from a Fratelli and a Grover. And you spoke about the tickets, right? People are paying for the tickets to go to Sula Fest because it's also a music festival. But that 3.5 crores of expenses on top of what they earned from the tickets.
Interesting.
So it was a net loss. Yeah. So, but for still them, it is great marketing. Still pays off for sure. Yeah. Now, the fourth part of their strategy piece, right, is the growth of the wine tourism business. Now, I'm taking this directly from the prospectus. The wine tourism business at the winery will help in creating awareness about the wine, which will in turn boost the growth in the wine market. So what they're basically trying to do is they're trying to grow the wine market to be bigger. Right now, the wine market in India is around 1,500 crores. So they're using this wine tourism to grow the wine market. And as the wine market grows, Sula will also grow with it, right? Now, I was teasing earlier about how much they're earning from wine tourism. They earned 58 crores from wine tourism in FY22, which is more than 5% of their revenue. In FY 2020, by the way, before COVID, they got 7.5% of their revenue from wine tourism. And they had an occupancy rate in FY22 of 70%. Again, remember, the Delta wave was part of FY22.
Yeah.
So they still had a 70% occupancy rate.
I mean, hospitality, the range of occupancy rates is generally 50% for a decent place, and then slightly higher, 60% for a good place. 70-80% is very high even for hospitality. And I just want to add a point here that we spoke about Rajiv obviously being from or studying in California and seeing the Napa Valley culture. And for those of you who don't know, Napa Valley is very famous for wine tourism, right? You might not have tasted their wines in different shops. You might not even recognize it if you're not a wine connoisseur. But a Napa Valley tour to one of these wineries is almost a staple, tourist destination when people are visiting San Francisco or people are visiting the Bay Area.
And this was exactly the next point I was going to make. In FY 2020, before the pandemic, Sula had around 370,000 people who visited the vineyards. So that's 3.7 lakhs. But in the US, and in the US, the main wine growing area is Napa Valley, something like 80-90%. They had 27 million people visiting. In Italy, it was 5 million people. So there is still a lot of space to grow, right? Obviously, I don't think anytime soon we're going to get to that 27 million or 5 million people, but it is a significant driver of revenue. And one thing I was shocked by when I was reading the prospectus was that Sula is also considering this as a part of their D2C model, their direct to consumer model. So what they also said is that they have the highest D2C sales in the wine industry. So their D2C sales at the winery from the wine tourism was an additional 24 crores. So 58 crores from the hotels and stuff, and an additional 24 crores from the D2C model. So that's 82 crores from the wine tourism business. And
I love how they call this the D2C model, because obviously the regulations don't allow them to be in e-commerce and reach where the consumers are. So they've called the consumers where they are, and now doing direct to consumer, which is amazing.
And this is the opposite of what all the other D2C brands are doing. They're building the physical location rather than, everything is e-com. But in the prospectus, they mentioned e-com a little bit, but not too much. So they seem to be doing some e-commerce, but not a lot.
Yeah, for just to repeat, I think we spoke about it earlier on the episode. China does 40% of their wine business, which is a huge $20-25 billion through e-commerce, right? So if ever regulations favor and e-commerce opens up for alcohol, that's also going to be a huge inflection point for all kinds of alcohol businesses, but wine specifically, because you'll have so many more variants coming in, so many more people experimenting with it. It's difficult to get a 24 cases of beer, a case of beer, but it's very easy to get a one bottle of wine shipped. So
yeah. So I just want to reiterate, they're getting 82 crores totally from this wine tourism business, which is 20% of their business, right? So it's not insignificant. And taking again from the perspectives, we expect our future capital expenditure. So now they're talking about where they're going to spend money to build buildings or stuff like that, to be primarily for the expansion of winery capacity and wine tourism business. So they've spoken about wine tourism a lot throughout this prospectus, because for them, this is a big part of their future strategy, and how they're going to grow the overall wine business in India as well.
One of the things that I can actually do, to be honest, is right now, maybe the wine tourism is targeted to a certain, income levels, because it's expensive to go stay at a Sula. But the fact that they have 2,600 acres, they can actually develop different kinds of properties, attracting different kinds of segments, just like they've done with the wines in their brands, right? That's one way to sort of go beyond just the elite segment in India for wine tourism.
Yeah, actually, they don't only have the wine tourism in Maharashtra; they also do it in their Karnataka places.
Exactly.
So I think they are starting to do it, and they're starting to multiply. But I think it's going to take time. It's going to take investment. But they are definitely focused on the wine tourism part of the business. But anyways, using these different strategies, what I feel like that Sula has been able to build is immense brand power. When you think about wine in India, what is the first name that comes up? It is always Sula. I challenge you to find somebody, ask them, give me a wine brand. If they don't say Sula as the first wine brand, I will be shocked.
Yeah,
I
agree.
And they're doing this through their distribution network. So people see Sula everywhere, and they're investing heavily in alternative marketing through Sula Fest and through their wine tourism to change the perception of wine and Sula across the country. Now, I just want to take everything, the story, the narrative that I have built, right, across by reading the financials, and I want to make a few points. So, first of all, what all of this means is that for the competitors, it's going to be extremely difficult to compete on production capacity and on branding, because on branding and on production capacity, they have built scale economies, right? Because they have 14 million liters of production capacity, and their other competitors are 4, 5, 6x behind. It's going to be difficult for them to compete with them on pricing, on building different varieties, etc. Right? Also, the amount of acreage that they have. Secondly, is going to mean that Sula is going to dominate the Indian public's perceptions when it comes to wine companies. And over there, they build brand power. Thirdly, I'm confident that the management team is going to stay at Sula for a long time because they're getting compensated so well. And now, and that is contributing to process power, what we spoke about earlier, because they stayed for so long and they built solid business in Sula. Now, what I think all these three things coming together, this is taking a note from one of my favorite books of all time about strategy. It's called Seven Powers by Hamilton Helmer. I was not able to say that name correctly. And basically, what it means is that if you have these different moats, right? Scale economies, brand power, process power, you're able to charge more money, you're able to make more profits than the rest of the industry. And the question that I have in mind is that, is Sula doing that? And I will emphatically say yes. And I will tell you that with clear numbers, right? So let's look at FY 2019. In FY 2019, if I look at something called return on capital employed. Basically, if I invest 100 rupees into a company, how much profit is it giving back to me, right? If that company gives me 20 rupees profit, that means 20 divided by 100, I have a 20% return on capital employed. It is a little bit more complicated than that, but you can basically assume that is what it means, right? In FY 2019, the return on capital employed in Sula was 12.6. In Fratelli, it was 1.3%. In Growers, this was minus 2.2%. This is before COVID. In FY 2020, this became 3.5% for Sula, minus 7.1% for Fratelli, minus 6% for Growers. In FY 2021, it was 9.3% for Sula, minus 7.7% for Fratelli, and minus 6.9% for Grovers. Now in FY 2022, I only have Sula's numbers because Sula is the only one that has filed for an IPO. In 2020, their reported return on capital employed was 20%. And 20% is what I generally look as a well-oiled company. Right? Those are decent profits, which give me the returns that I need for the amount of risk that I am taking in terms of entrepreneurship. And from the numbers that I do have, Sula is the only wine company in India, only large wine company in India that is making profits. So this is clearly showing that using the powers that Sula was able to build by employing so much money into their production facilities and their acreage, by putting so much money into marketing, by putting so much money into people, after all of this, they were able to build a moat where they're able to make extraordinary profits compared to their peers. And that is the end of my story on Sula. I hope you enjoyed it.